Hey, good morning, guys. This one's a members only stream, right? So I've been sharing a little bit in the prop channel this morning, right? And obviously, what I've been talking about in the last couple of Bitcoin videos and so on. Don't assume this to be different to anything that you've seen in the educational content, right? This comes back to what me and Paul were showing when we first started talking about the prop firm channels, and it's just trying to have a strategy that you can use almost any time, right? Now, you don't need to forget Elliott Wave or Wyckoff or anything else. This is just a kind of a simplified, kind of almost dumbed down version of the similar concepts, right? So it's just kind of finding the logic without having to name the logic, right? Without having to identify, a pattern or a move or a spring or a UTAD or anything like this. So the general idea, right, is if you were to simplify it and you come out to say a 3 time frame type tier, right? Now, as I've talked about with things like Bitcoin, right, and why the price could go from 69 to 28 from the first, rocket call. These levels, these numbers, right? They're not magic. They're not awkward or difficult to find. These areas are just areas of interest, right? And the areas of interest are created in two ways or two methods. So, first method is when the price ultimately shoots down very fast, right? It creates ultimately a gap in the price, right? Now, this could be obviously when the price shoots up very fast, it creates ultimately a gap again, right? So you can see gaps like this. Right? Now, again, if you don't know how to identify these gaps, there's a couple of videos in the education section on this, right? So that is something that some people will call an imbalance, some other people will call a fair value gap. There's probably another 35 names for the same thing, right? But in theory, all it's doing is creating a gap based on speed, right? The acceleration of a move. Nothing else, nothing less, right? That's ultimately what it is. Now, if you think logically, right? And I keep saying logically, this is a very, very key point. A lot of newer traders tend to miss simple logic, right? And that's that's not. I suppose it's not a negative comment. It's more the what new traders are looking for is 48 indicators. They're looking at 15 pairs. They're looking at 25 time frames. It's just too much, right? It's it's 8 charts. It's 5 screens. It's let's trade on my phone and my laptop. And a tablet. All you need to look about, right, is think of the logic, right? When you see an Elliott wave move, what's actually going on? Right? You got an accumulation moved on the bottom, right? You then have another accumulation move. You then have another accumulation move, right? Pretty straightforward, pretty easy to comprehend, right? Now, if you can't, do your own count, there's 1, 2, 3, 4, right, and 5, right? Again, very simplistic. Now, when I talk about things like Dow theory basically talks about 3 trends, right? There's 6 core rules, right? One of the rules is to do with volume. One of them is to do with the indices. The rest of them are basically to do with trend following. The trend is the trend until the end, right? Until you get that break of structure, change of character, market structure shift, whatever you want to call this terminology. It's basically another one of the rules, right? Now, obviously, from an Elliott wave perspective, a 1, 2, 3, 4, 5 count impulsive, followed by an A and a B and a C, right? What then tends to happen is from a Wyckoff point of view, you have this large accumulation, you have a reaccumulation, you have the markups in between, then you have ultimately a distribution followed by markdown, right? On a bigger time frame, this could be at ABC equals your larger scale A. You come back into the same range, right? This making this basically another distribution, and then you have your markdown again, right? Which tends to be 100% this one. This obviously pullback sometimes 50, up the way. It could even be very high in some instances. We could be talking about an 86% type move of the range A, and then ultimately we drop on back down, which is usually 1.618, right? Or we get somewhere around the 2.72. Okay, so anyway, that's all kind of irrelevant, because in the grand scheme of things, right, these are just how these, these techniques, these schematics, these tools, these theories all start to piece together for you, right? So if we assume we have an impulsive move, right, now we're going to see potentially gaps forming in these impulsive moves, as I've just mentioned. The gaps are formed because the amount of buying in this position, right, is institutional money flow, institutional order flow, pushing price up, right? Now, when the price comes back, two is often very deep, right? Two is often very deep into a move. Now, the reason for this, right, is if we assume we've had our leg down, this move, right, being not so aggressive, which is why one can, often be ugly. This move is not that aggressive based on the fact that composite man, bigger players, institutional players, whatever you want to call them, right? These guys are trying to convince the retail traders that the price is about to continue on down, right? So at this particular stage, this is a perfect buy-in opportunity if you're a retail trader, right? All the moving averages are going to be pointing down. Everything is going to look ugly as shit in terms of this move, right? So this often becomes a very deep move based on the fact that it's a trick move, right? It's a play to kind of sucker you in terms of why we're going to continue on down, right? Now, in smart money terms, right, and other concepts that you might have heard, number one could also be viewed as an inducement, right? This is kind of showing its hand that it was the first aggressive move from potentially all the way up here, right? We've had this kind of major shift down, then we get this kind of aggressive pullback, right? Now, this is what we'd call an AR potentially on a Wyckoff schematic, right? This is the expansion phase within a master pattern, right? So again, you see how these things all start, coming together, kind of fitting together, right? So just think back to the logic, right? And this is why this is, a very, very simplistic approach to the market. We have this major move, right? Now, at that particular point, yes, the price comes deep, but as an order block or a sell before you buy, right, that last candle is kind of the clue as to where the strength sets in, right? Because it fails. So that failure and the inducement is kind of the clue, right? Now, obviously, you're going to look at things like fair value gaps, but this is where these blocks maybe become a little bit stronger, especially on that first shift, right? Then as the price rejects again, usually a little bit harder, because at this point, retail traders are really trying to push hard to push down. And this is giving the liquidity for the big boys to really drive the price up, right? Then you get that breaker structure. That breaker structure here, right, does a couple of things, because what we've done on the move down is we've now changed the character to the upside, right? We've got breakout traders, we've got stop losses, we've got all the fuel, all the momentum for a move up, which is why 3 in Elliott wave terms is often the most aggressive, right? See, it's not magic, is it, right? So putting all these little pieces together, putting all the blocks together, right? What you need to be thinking about is why? Why this, why that, why there, why here, right? So if we follow some of this logic through, right, let me come up to an actual chart. What I've been looking at and what I've been tracking, right, and tracking is probably the key word in something like this. Right? On a daily time frame, I'm going to use this as my bigger move, because I could zoom out to a week, I could zoom out to a month, and I can kind of see what's going on, why, where, how, right? But in the grand scheme of things, right, we've got this major high up here, right? We now have this major low. So for me, clear as day, in a weekly time frame, these are my weekly range, or this is my weekly range, right? These are my weekly range type moves. Let me get rid of that alert. So with that being said, right, at the moment, we are technically in a weekly downtrend, right? Because what we've had this move here, and this actually changed the character. We then come back up, and so far we failed to make a new high, right? We then come on back down, and this time we failed to make a new low, right? So at this particular point, the way that I'm reading this is that this was the overall bias down. This has been deemed a pullback, right? This is our first leg down, which is relatively weak. And now what we do is we shift back to the upside, right? However, we still have this major level up here that is yet to be broken, right? So, see how simple and how logical this particular move is, right? Now, what we can do is we can do a couple of things. We can say, right, we now know that this swing low is more appropriate, right? Because it broke and changed the character of this move. We know that this move has yet to be taken, right? So what I can do is I can stick a little box on the last candle, which is quite the big candle here because I'm on a daily time frame. And I can zoom across, right? And I can drag this all the way across and say, wow, look at the magic. That last buy before sell candle was rejected, right? Which means there's an awful lot of sellers sitting in this position. We got rejected again, right? Straight back to the situation to be only rejected, this time massively, right? So if we've been rejected, where are we likely to be rejected to? Well, clear as day, this move, first of all, came up, right? However, issue being, we failed at this point to make a new high, right? We could even argue, well, we could argue that we got this in there, right? But it kind of didn't really close, it's more of a sweep. So we then come down, and this is the reason that I've got this box highlighted, is that this one for me is more the magic zone, right? Because this one kind of failed there, definitely failed there, and it took a second attempt, right? Which means a lot more buyers are sitting in that box than they are the box below, right? Now, at that particular point, the question mark for me is if we come into this range, right, and we don't create a new high, right? We get a kind of a limp pullback. Well, clearly the trend is going to kind of continue on down, right? So what you're going to do now is just follow the logic all the way through this type of situation, right? We now have this box up high, right? That's obviously where all the sellers were. This box down low is where ultimately all the buyers are. Then we're going to drop into a smaller time frame, right? This is why I say the 3 time frames. Don't complicate it, right? There's no indicators, there's nothing else, right? And then we can drop into these smaller time frames. So all I'm doing is I'm chasing the money, following the logic of the money, right? Now, if you assume the same kind of concepts, right? And this is why I said there's only 2 ways really these auction areas are made. The auction areas I would class as master patterns, I'd class as mini Wyckoffs, right? You're going to see, 1, 2, 3s, 4s and 5s on an Elliott wave move. So again, this is where all these things kind of come together, right? Ignore everything else, right? Everything else is almost pointless, right? So on a smaller time frame, now on a 4-hour, the move clear as day was doing this, right? So we were ascending up into an area. We know from the daily that this was an area of interest for sellers. We get our last buy before sell candle in there, and the price just plummets, right? Now, usually you'd expect some kind of half decent pullback. We didn't get it. And the reason we didn't get it is the half decent pullback on the bigger time frame was obviously over here, right? This was the high, this was the move into a pullback, follow on down, right? So again, ABC. So we could probably measure ABC, probably work out where that is if we really wanted to, right? Now, I'll do it as an exercise just to show the general concept, right? Now, again, I don't need to do it. You don't need to do it, right? I think that's kind of the point. But I'm just going to do it just out of curiosity, right? So stick your trend extension on, come up to the high, right? This obviously is pretty similar to that Bitcoin high that I've talked about in terms of 69 to 73, right? We've got some kind of, running move there, right? Now, all of a sudden, we've hyperextended in this move, right? So I'm seeing this as we are pretty much tired, right? Because we've gone past that 1618, which is the usual move for a move like this, right? Nothing saying, we can't go to 3618 or beyond, but in the general sense, right? So what I'm now looking for is we kind of near in the zone. We've hyperextended on that bigger move, right, in terms of the fib extension. So I kind of want to see the move starting to tire as we get into this kind of block, right, as we get into this zone. Now, like I said, I'm on a 4-hour time frame, right? Clear as day, trend is down. All I'm doing is, if I really wanted to, again, right, is following the move down, up, down, 2 to the left, 2 to the right, right, and I'm just going to keep going in this kind of idea, right? Now, again, I don't really need to do this. I'm doing this more for the sake of showing you guys. The reason that it's this one and not this one there, right, for example, is 2 to the left, 2 to the right. That one is obviously higher, so that definitely is the low. But the reason that I can't go back to this one being the high is that the low obviously is after, right? So it's, again, just simple logic, right? Keep the same rules all the time. I could look 2 to the left, 2 to the right. Technically, this one here, very similar situation, right? Probably could get away with it not being there, but I'm going to put it there because that's the rule. Now, the issue that we have, right, is if you come down, let me zoom in just a tad here. If you zoom in just a little bit on this, right, and we get a bit closer to the actual price action now, we drag them across, right? The issue that you have on the next move, right, is that if we assume this one as some kind of hanging candle, 2 to the left is actually lower, right? Now, again, similar there, 2 to the left, actually lower. So although we've got these highs, right, which 2 to the right and 2 to the left, and when I say 2 to the left, 2 to the right, the candle before, that's 1 to the left, 2 to the left. If any of those two candles are higher, right, then that wouldn't be deemed as the high. Again, if the candle to the right or the second candle to the right is higher, that wouldn't be deemed as a high. The only issue being with this particular move is the fact that we haven't had 2 to the left, 2 to the right, all the way down. This move can be justified coming all the way down to the bottom, ignoring all those minor swings in there, right? Then again, we come back up to exactly the same thing. Again, this one, 2 to the left, 2 to the right, nope. So we come down here, right? And all we're doing is we follow in the logic, right, until we get to the point that we have our final swing, which is why I've marked this as a strong high, right? Now, the reason that I've called this a strong high is ultimately that high created, right, just zoomed out, that high created a break of structure to the downside, right? So that basically means sellers are in control. So sellers are in control on the daily, sellers are in control on the 4-hourly. That leaves me my third and final time frame. Now, there's nothing stopping you dropping down smaller time frames again if you want, right? And as I've showed this morning in the prop channel, obviously I've dropped into a 1 minute to see a change of character, right, occur. So all I've done right now is I've marked some of these levels up, right? This level, less important for me now. 4-hour high is this one. 4-hour low has yet to be formed, right? We can't class this one as a low because 2 to the left, 2 to the right. 2 to the left works, 2 to the right doesn't, right? So I'm just dragging my weak 4-hour low until we get a reversal, right? So I'm following the logic. We've had a massive move down, a pullback, a massive move down, a pullback. What looks to be a massive move down, pullback expected. Now, I'm not going to look at taking that as a 4-hour move until clearly I get a change of character. So in a 4-hour move, what I'd like to see is a move above, obviously, this level first, a pullback to a level that doesn't create a new low, and then at this particular point, I'm able to take this, right? And that's providing this low stays, sorry, this high stays the high. Otherwise, it's not until here, right? Now, that doesn't mean I have to wait for a 4-hour move. That's just if I'm looking for a 4-hour pullback. That's where the logic sits. Right? That's as simple as, again, mechanical, easy to follow, easy to kind of run through. So I've now dropped into the 15-minute. On a 15-minute time frame, I've added a couple of extra little bits, and these are only just from, from experience, from looking at things like an Asian sweep early in the morning. 9 o'clock for me, 9 a.m. is the Asian move. So I've marked up the Asian move was actually the Asian high was this high here. So I've actually marked it out 15 minutes strong, as well as the Asian high. The orange dotted line is the Asian center, so that's the 50% from here to the low, and the Asian low is this dotted blue line. Right? So at the moment, I'm seeing a sweep to the upside, which is a fail. Then we literally come all the way down, right? And we have obviously actually closed in the next 13 minutes. If this doesn't make a new low, then we've actually got a 15-minute low already in, right? Now, the reason that I'm expecting some kind of pullback here is we've had zero pullback on the 4 hour, zero pullback really on the daily. We're kind of nearing this final destination as far as I'm concerned, right? And all I'm saying now is that I'm expecting some kind of pullback at least. I just don't see any more logic for a continuation down. I think this is where we get that final push up. The push up brings us back into liquidity, which will obviously sucker then both directions in terms of a much larger corrective move, right? But that much larger corrective move on a 4 hour or daily is going to be induced by the 15-minute or the 1 hour, right? And therefore, zooming in to a smaller time frame again, right? I'm not looking for where my targets are. I'm not looking for, where the destination is. I'm just looking for logic as to, are we finished to the move down for now, or are we going to carry on down? If we're going to carry on down, what I want to be doing is I want to be selling pullbacks, right? I want to be looking at moves like this over and over and over again. Right? If I'm obviously looking for a reversal, the reversal needs to come, right? Ideally on your 15-minute. Let's drop into a 5. In a 5-minute move, what we can see at the moment is we've had a low. We've had our first structure high right there. We failed to make a new low so far, and therefore a move above that would signify basically a move to the upside, right? So at that particular point, there's options for entries. There's trades. Now, if we know that the 50% marker is quite a hefty target, let's just assume we put something like this in, right? We want to come just below that low, and then we've got a trade that could look something like this, right? And this is on a 5-minute time frame. We got a trade that could look something like this, right? Which is obviously just a 2-to-1 trade, so it's not really that kind of snazzy, not really that sexy at the moment. We could probably get in on a tighter move on a 1-minute, right? But these are the types of things that you're actually looking for, right? Then what we want to see is, as we do come up to a range like this, we'd like to see a change back to the downside in a similar fashion, because the daily and the 4 hour are kind of pointing down still, which means we're looking for the end of the pullback trend to go in our overall trend direction into the weekly level of demand, right? This is where the liquidity on that demand zone is actually sitting. So again, very simplistic, right? I know this one's a longer video. I know this one is kind of walking through, but you really have to start to think about why the moves, right? What's happening in the move. Every time you get one of these break of structures, right? What's actually driving that break of structure? If we look at the kind of levels, right, we've had zero pullback into this range. This range broke clear as day, the structure, right, which means this is an area where we have an awful lot of sellers sitting in, even on a 5-minute time frame, right? We come down, we have an auction area, right? This is going to be a master pattern, on a smaller time frame again, got a 50% marker, right? We literally pushed away and no pullback, right? So again, sellers are very aggressive in this position. Now, at the moment, look, what's happening is sellers are kind of running out of steam. Right? So what we're going to see is either a very limp move down, followed by a more aggressive, which again, master pattern would give us an expansion, right? Pullback, and then ultimately a move up. So all I'm searching for is the logic as to why this or why that. And I'm not jumping into any trade, just because. I'm looking for the change of character. I'm looking for the break of structure. I'm looking for the rationale above in the higher time frames as to why I expect a move like this in the area that we're in. And it's as simple as that. You follow this logic and you follow this logic over and over and over again. You don't need anything else, right? Where Elliott and where Wyckoff and where these other kind of bigger tools come in is understanding a much larger bias of the much larger picture. You don't need to trade Elliott wave on I'm trading an A to B on a 15-minute time frame. You're just going to lose yourself, right? You're going to have, new spikes. You're going to have things that just change, your opinion on the count. Ignore all the noise. Look at the Elliott wave and say, right, I know where I am on a weekly or a monthly, even a daily count. Everything else, it's irrelevant, right? And this is where, if you're trading these smaller time frames, you can take these types of trades all day, every day. Right? For me, still personally, I would still trade and still prefer to trade a much larger swing. I would want to see 1, 2, 3 coming down to 4. I want to see this type of movement at my 4 trailing to a 5 on a monthly time frame, right? That is where the absolute cream of this type of trading is, right? That's the kind of, one trade will make you 2 years worth of money, right? That's the value on that size and that time frame. These little ones, they're great to play and they're easy money. But in the grand scheme of things, the more data that you collect, the more that you follow, the more that you track and stalk this particular move, the easier even the smaller time frames are going to be for you to play. All right. Hope you enjoy this one. I'll see you on the next one. Cheers, guys.